So this is D-20. I have 20 days till my CPA digital finance exam. So I need to get started with this subject. So let's first start with module 1, the digital finance ecosystem. So I'm just gonna talk about a few things that's key. So a few key points in this notes I made. I mean, just based off this study guide. So yeah, part A, technological evolution. So big data is characterized in terms of 4 V's. So volume, variety, velocity, and veracity. Volume is the size, variety is the depth, velocity is the speed, and veracity is the quality, variable quality of datasets, given the diverse source of data collected. So yeah, we need digital literacy, so that's knowing enough about the application benefits, cost, and limitation so that we can add value. And we need enabling skills. So enabling skills encompass behavioral skills, data analysis skills, and finance skills. There's competitive advantage because business is all about competition. So yeah, when there's something that you can do better than the competitor, then that's competitive advantage. But transient advantage is temporary, recognizing that some advantages cannot be sustained as competitors quickly copy or improve on an innovation. So it's very temporary. So within this digital finance cube, there's digital finance business functions, which has digital financing, investments, money, payments, insurances, and financial advice. The second part is the digital finance technologies and technological concepts, which has blockchain, social networks, near-field communication, peer-to-peer technology, big data analytics, and further enablers. The last part is digital finance institutions, which has traditional service providers and fintech companies. So let's go. Digital financing, it has invoice financing, lease financing, crowdfunding. Digital investments has online brokerage, and there's high frequency algorithmic B2B trading. Something like eToro, that's always on the YouTube ad. Social trading, it refers to securities trading via internet platforms that combine social media networking with investment strategies. Algorithmic trading, that automatically initiates and manages orders without human intervention. Yeah, so algorithm trades for you. Digital money, digital payments. Also, digital payment is also known as electronic payments or e-payments. Peer-to-peer payments, so P2P payments, or digital payments between private individuals. So PayPal, Google Pay. Digital insurance, digital finance advice. So digital finance advice would be some things like robo-advisors. So blockchain, social networks, near-field communication. So that would be like wireless and point-to-point, something like smartphone or smartwatch. That's NFC device. So technology is any process by which company transform information and data, human labor or economic capital into products or service of greater value. Innovation is a change in the way technology is used. So there's 10 types of innovation framework. So within configuration, there's profit model, network, structure, process. So profit model, how the company makes money. Network, how the company connects with others to create value. Structure, how the company's resources are organized. Process, how the company uses signature or superior methods to do its work. So product performance is how the company develops distinguishing features and functionality. Product system is how the company creates complementary products and services. And these other 7 to 10 it's under experience. So service, how the company supports and amplifies the value of its offering. Channel, how the company delivers its offerings to customers and users. Brand, how the company represents its offerings and business. And customer engagement. So profit model, network, structure, process, product performance, product system, service, channel, brand, and customer engagement. So from the beginning, so number 1, profit model is more internally focused, whereas number 10 is customer focused. That was innovation framework. Next, how funds flow through the traditional financial systems. So on the top, there's lenders and savers, so consumers, business, and government. They give indirect financing or direct financing. So lenders, they give funds to financial institutions or financial markets. And this goes down to borrowers and spenders. So financial market is a direct financing method. So this is like shares, bonds, and money market instruments. And financial institutions, they're like commercial banks that invest in financial assets and provide financial services. So fintech 1.0, that's from 2010 to 2014. So the fintech startups, that they fell in 3 categories. So those that focused on payment processing, those that generated new lending models, and those that helped banks through personal financial management and risk modeling tools. So it was very basic, fintech 1.0. Fintech 2.0 is from 2014 to now, I guess. So there's more collaboration and cooperation between banks and the fintech companies. And this is largely facilitated by API, application programming interface. So API is a set of protocols that enable different software components or systems to communicate with each other. It's allowing different software to communicate with each other. Open banking is based on open marketplace created through apps, APIs, and analytics. Okay, so the difference between current state and future state of these bank processes will be there will be more robotic enabled processes in the future state. So in current state, when there's a process between bank employees and the enterprise integration, in the future state there will be more, within that process there will be robotic process automation, and this integration would have cloud next to it. And the current state has this legacy core system, whereas, yeah, I really don't know where I'm going with this, but yeah, there's gonna be a lot of robotics. Part B is digital finance ecosystem. So digital ecosystem is a dynamic integration of organizational departments, suppliers, tool systems, customers, and external partners, brought together to increase data flow throughout an organization and drive business performance. So in a cooperative network, participants share information and expertise while remaining independent and only interact when necessary to harmonize. Whereas collaborative is interdependent, so there's a mutual commitment to working with other members of the network. So cooperative is being independent, but you're working together, sharing information and expertise, whereas collaborative is interdependency. Okay, that's good. Good to know. So the digital ecosystem components, there are 3 interrelated and interdependent components. So software ecosystems, data-oriented ecosystems, and ICT infrastructure ecosystems. ICT infrastructure ecosystems, that's referring to the hardware and software services that capture, store, and organize data. So how can this ecosystem, digital ecosystem, create and deliver value? You can increase sales, return on investment, ROIs, open new revenue sources, reduce risks, increase speed of technology adoption. And in order to evaluate an organization's digital ecosystem, there are 4 questions you should ask. So how is the business utilizing technology? Do the current software and data tools enable a consistent customer experience? How do employees and departments engage with the ecosystem? What software and data tools need to be implemented? So that's how you evaluate digital ecosystem. So technology, customer experience, employees and departments, and software and data tools. That's like the key points from there. So the requirements for a digital finance services ecosystem. So it starts from the DFS provider support services, the enterprises and networks that extend coverage of DFS providers and interfaces to users. So agents and processes. These processes down to DFS providers providing digital financial services, so banks and other financial institutions. So from the support services to provider to user and actual DFS, and then that has use cases. And infrastructure readiness is technical systems to enable digital financial services. So it has payment system, voice and data communication networks, energy availability and identity systems. And another part is enabling environments. So regulatory supervision and standard setting enabling environments. So this has regulators, financial inclusion policies, standards bodies, and industry groups. Okay, so the mobile payments are developed in 2 ways. Closed loop systems and open loop systems. Closed loop systems is where non-bank providers create transaction accounts allowing their subscribers to store funds in these accounts and make transfers to other subscribers. Whereas open loop systems is where banks are the primary providers of digital financial services. So closed loop system is non-bank providers, whereas open loop system is when the banks are the primary providers. The weakness of closed loop is lack of interoperability. So the subscriber to one system cannot pay to a subscriber of another system. Whereas the primary weakness of the bank-led model has been adoption among lower income earners. In order to boost this digital liquidity, we would want the delivery of bulk payments into digital wallets. We would want enablement of merchant services infrastructure to receive payments out of digital wallets. The development of interoperability among providers of transaction accounts. And the delivery of additional financial services through the connection to the digital wallet. So digital liquidity has a lot to do with digital wallets. That's what I got from this. So there are some issues and challenges in this DFS ecosystem. So there's digital divide, which is to do with internet access, gender gap, digital skills. Second one is data privacy and security, which is obvious. Third one is quality of work. And lastly, competition. A fight for market share can result in a pricing war. So current fintech solutions are new payments platform released by Reserve Bank of Australia, AI-enabled analytics, such as know your customer, so KYC obligations, and anti-money laundering AML legislation, machine learning enabled analytics, increasingly open data access, and real-time notifications. Examples of fintech innovations in retail are buy now, pay later, open banking, which gives customers the options to allow third-party access to their accounts, mobile point of sale, cross-border payments, and checkout-less stores, such as Amazon Go stores. I would like to go to Amazon Go stores, but I don't like checkout-less stores. I mean, it's not even in Australia, I don't think. Neobanking refers to the sector created by emerging bank startups So neobank, from Wikipedia, it says also known as an online bank, internet-only bank, virtual bank, or digital bank, without any physical branches. Edge computing is associated with IoT. Edge computing involves using cheaper, new processors to move storage and processing to the edge, that is, to the IoT devices that traditionally only creates raw data. It's more efficient as less data needs to be sent between the device and central server, more reliable as it is less vulnerable to data loss, faster as less data is exchanged and data is processed as needed within the device. Okay? So when it comes to digital transformation strategy, the business must avoid problems of embracing the technology too early, implementation plans that cause excessive disruption, and any plan that cannot identify, monitor, and evaluate meaningful change within the organization. There are 8 digital transformation methodology phases. So first, assess the opportunity, then create a vision of the future of the organization, mobilize stakeholders, design the digital roadmap, implement and test a prototype, check stakeholder engagement, transition, and lastly, ongoing evaluation and improvement. So that's the methodology phases. So when it comes to mobilization phase, that's when the organization aligns its strategy and goals to the transformation strategies and obtain buy-in from stakeholders, in particular the workforce. And examples of activities in the design phase could be creating the implementation project plan and creating a detailed transformation roadmap for the development activities. So 4 values that's created through digital transformation would be operation efficiency, so reducing operational and R&D expenses. Time to market is reducing the time to launch their products to market. Product innovation, and lastly, quality. So top 10 obstacles to innovations are 1. Public relation value versus real results. So the organization may look like they're adopting an innovation mindset, but they're actually not doing it. 2nd, hampered by heritage. So there's simply too much legacy infrastructure to be able to adapt and change. 3rd, no real sense of urgency. 4th, cannibalization of existing revenue streams. I think there was an example of Netflix and Blockbusters. Yeah, they had, so because they were focusing on short-term results and they didn't want to cannibalize their existing revenue stream, they missed out on the opportunity to branch into those online sectors, like how Netflix transformed into online-based company. 5th, a lack of experienced innovators. 6th, a culture clash. 7th, a lack of ownership and sponsorship. 8th, compartmentalized innovation. 9th, governance. And 10th, who else is doing this? So key questions for the enterprise before proceeding with transformation. So how shall we adapt to new digital trends? How shall we identify new opportunities and business scenarios? How do we get started? How do we attract new talent? How do we incorporate change management? How do we convince the stakeholders to approve the idea? How do we internally fund and govern digital information projects? And how do we help the employees and business partners get connected through digital means? Technology development timeframes. So immediate deployment will be AI, IoT, robotic process, RPA, chatbots, cloud computing, big data analytics, smart sensors, cybersecurity, and agile development. Those are the ones that's already common. Whereas short-term deployments, they'll be within 1 to 3 years. So predictive analytics, machine learning, identity management, blockchain, industrial robots, connected home, edge computing, fraud detection, natural language processing, industry-specific APIs, 3D printing, simulation modeling, design thinking, and user experience. Lastly, long-term deployments are within 3 to 5 years. There will be activity streams, behavioral analytics, API orchestration, and bioinformatics. So I've never heard of those stuff. So that will be long-term within 3 to 5 years. So okay, so that's done. Oh my god, module 1's done.